The Todd Shapiro Show.
Time to hit the button!
On Canada Talks, SiriusXM 167.
Genevieve Roch-Decter, how you doing?
I'm awesome. How you doing?
Well, I'm out in L.A., and is not to sound like an old man, as we were saying earlier. It's not that pleasant. So I might as well be back in the snow. The weather's terrible.
Oh, really? Well, what about how are the investors out there? Do they like stocks in LA? Are there stock jocks out there?
Hey, actually, can I ask you a question? What would be the financial market area in Los Angeles? Is that downtown LA?
I don't know. Okay, I know that there are a lot of financial managers in LA because obviously there's a lot of money, but I don't really know that it's more for the accredited investors as opposed to like if you're trying to get in. There's not a lot of companies really. Do you know what I mean? It's not like Toronto where it's like every small cap company. They don't have that same ecosystem.
And then the other thing I was going to ask you, I would imagine that being like kind of working within the markets, being out in anywhere, whether it's Vancouver, LA, like on the West Coast, that would be terrible because you'd have to get up, you'd have to be prepared for 6:30 every day. Yeah,
they got to be up at 6, but you know what? Then they can hit the slopes or whatever, hit their bike, in the afternoon. So they kind of have like a half day to do whatever they want. But you could go up to Silicon Valley. Actually, that would be a good one if you wanted to go to like venture cap world.
Have you toured Genevieve Roch-Decter? Have you been that way?
Yeah, actually, you know what? I read the biography of Steve Jobs, and I actually went to his favorite sushi restaurant in Silicon Valley, and I nerded out pretty bad.
Do you? Can I ask you a question, personal? Not necessarily personal, but being a female in an industry that's typically male driven, and the reason why I thought of this is because of all the disparity between salaries in Silicon Valley you hear, and all the sort of there's a lot of there's a lot going on in Silicon Valley that's not really talked about. A lot of protests happened recently at Google from women because of the treatment from men and this sort of equal pay matter. Do you get a lot of this? Is it tough to be in an industry so men driven?
I mean, I say I was raised by wolves, so it's definitely made me very hard on the outside, a lot softer on the inside. But I come from the school of if you see a problem or focus on a problem, it will become a problem. So I don't look for those things. And I just every day when I go into work or go into work for a client, I just look to add value. And it doesn't matter to me that I'm a girl and I'm dealing with tough guys. It's like I just have to be better than myself yesterday. Every day, that's how I go in.
That's a great attitude.
Yeah, that's Michael Gelbart, but that is a great attitude. I spent half my day in my in the bed in my hotel room. I was not better than. Oh no, yesterday I spent all day in my hotel. I'm just getting worse.
Yeah, you're not your best self.
Those things, the most socially acceptable addictions. It's called a work addiction. So every day I wake up in beast mode.
Good for you. No, it's very inspiring. You should actually be, super proud of that, and I think it's something that people can learn from you. Okay, let's get into the Blau. Start hitting the IDs here.
Hot stock sector of the week.
All right, Genevieve Roch-Decter from Grit Capital. What's your best player or team of the week here in the stock market?
All right, stock of the week. Everyone we know has an Amazon addiction. We buy too much stuff online and then we don't know where to put it. So the stock of the week is a company called Storage Vault. The ticker is SVI on the venture. The stock was up almost 6% last week, almost hit an all-time high, just touched the $1 billion unicorn market cap mark, and it's now the third largest company on the Toronto Stock Exchange venture. And so these guys basically have capitalized on the fact that we buy too much stuff and then we don't know where to put it. And so they own these storage facilities across Canada, and they announced a massive acquisition last week, and the stock went up.
Love to hear it. Do you have a position in the stock?
I don't, but I used to back in the day. So when I was preparing actually for the segment, I said, oh, wow, this little guy's really done well.
Oh, that's good. And what's the symbol again?
SVI on the venture.
It's amazing, eh? Like we think about, everyone tries to plan everything. How do you make money? And here's a company that's going, man, you guys, you're sitting there planning too much. And then you're buying things because you think you're going to make money. And then you don't even need these things. And what we're doing is building the biggest storage company out of this country because of.
And what often happens is people sign up for these storage vaults. Like my dad has one, and then you just like forget about it. So it's just like a Netflix membership every month.
Yes.
You're like, $10 or whatever. I don't know what their fees are, but they're small enough that you kind of forget about it.
I know, it's brilliant. And they're just sitting there collecting residual value. Wow, what a great company. Okay, Bilal.
Worst trade of the day.
All right, well, this is actually the worst trade last week. A company called Rocky Mountain Liquor. The stock is not doing well, but I love it. The ticker is RUM, RUM, on the Canadian Stock Exchange. These guys own 33 liquor stores in Alberta. I don't know. People might be smoking cannabis instead of drinking. They're having some problems. So their stock is at 5 cents. It's a penny stock. It was down 16%, or it's down over 60%, 60 from last September. And their debt trade, so their debt was actually down 16% last week. And I was wondering why. I was like, why is their debt down so much? Why is this company in so much trouble? So I took a look at their balance sheet, and it looks like they owe about $16 million, but they only have about $10 million in liquid assets. So the balance sheet's looking very tight here, and this is why the debt's trading down, because people are thinking, hey, they're not going to be able to pay it back.
Fascinating update. And it's interesting you say that. I was watching a little clip today from your buddy Jim Cramer from Mad Money, and he was talking about how Constellation Brands, which recently did a big $5 billion stake into Canopy Growth, that their stock's been hurting. And part of the reason why, and listen, you're talking to a guy who owns a minority stake in a beer company called Lake Wilcox and the Umflager, but the beer game, there's a lot of decline. And you mentioned it because there are more people using cannabis, especially in a legal country like Canada, here in California where it's legal. So it is definitely hurting these companies. And I think Kramer was going to talk tonight about what's the better investment. Is it actually STZ, which is Constellation Brands, or the company that they bought into and own 38% of, Canopy Growth? And I think he was leaning towards Canopy Growth based on the fact that more people are indeed now using cannabis, which means that they are drinking far less, and that could be a reason for this rum company as well. It's really wild, this, and you're so heavily involved in the cannabis space, but how disruptive this industry is, isn't it?
Yeah, and I was going to say there's been some studies actually that show that in the States, in the U.S., where cannabis has gone recreational legal, like fast food restaurants see a spike. This isn't actually a joke. They actually see a spike in people coming into the store around certain like high frequency times of people who consume cannabis. So there's like a positive correlation there. So yeah, I think people are drinking less and smoking more. I don't know what that means for people's waistlines, because like what's better, drinking beer or smoking cannabis and getting the munchies? I don't know. Those kind of cancel out. I don't know.
Oh, here we go. Adding to the stigma. Genevieve Roch-Decter. Michael, jump in here.
I think beer is worse. I think alcohol is worse because you still tend to eat pizza and chicken wings when you've drank alcohol. So you're still going to eat bad food. So I would say, and you have the bloat from the alcohol. So alcohol gives you more blubber than weed does.
Okay, expert opinion. I
don't do either of them.
You don't do either. Let's move on, Bilal.
Finance term of the week.
Okay, this is my favorite. So Genevieve Roch-Decter comes on from Grit Capital, and she always drops these dimes, man. And I have no idea what she's saying half the time, and neither do a lot of our listeners. We're kind of learning about stocks, the stock market, the financial markets, the industry through her knowledge. But sometimes with the terms, and people will do that in any industry. A doctor will give you a big name like ibuprofen, and it's like, no, it's an Advil. You don't need to tell me ibuprofen. And it's the same thing for the stock world. So what is the term this week?
All right, the term of the week is EBITDA, which is earnings before interest, tax, depreciation, and amortization. Don't fall asleep. Why is this a wonderful term that allows us to compare the profitability of companies across different sectors, different geographies, different debt situations, different tax situations. So it's like, okay, I'm going to compare the earnings of Canopy Growth to Shell oil station. Like, it allows you to compare those two things. And it's a wonderful term, and it's like, very prevalent in finance. But the part that gets really messed up is when companies put adjusted EBITDA. So they stick the big word adjusted on the front of it, which basically allows them to put costs back into the profit. So it like swells their profits back up. And they're allowed to do this when they call one-time costs. But what I'm very suspicious about is sometimes those one-time costs end up being forever costs. So I would just say look to EBITDA, but be careful with adjusted EBITDA.
And EBITDA again?
Earnings before interest, tax, depreciation, and amortization.
So let me ask you a question, and I'm being serious because I understand this a bit, but I still troubles me a little bit. If say my company earned, we'll call it easy numbers. If it's my company, for sure 10 million last quarter, easily, just because it had to do with me. But and then what, typically what would you take off? Like, what is there sort of a formula after that based on all those other things in the acronym that would there be a certain percentage that would usually be off that EBITDA, or would that not necessarily be consistent?
So what would happen is you take that 10 million, but I think you should be more around the 100 million mark. So I'm just going to
thank you.
To 100.
Appreciate it. Appreciate it. Thanks for that.
Okay. Let's say you're Todd Shapiro and you've leveraged up. You have a lot of debt. So you have an interest payment. So we add back that interest payment on your 100 million. So say that's 10 million. Now you're at 110 million. You've added that back to your profitability. And say you're in Canada where we pay a lot of taxes, high tax rates. So I'm going to add back the tax. So probably corporate taxes around 30%. That's another 30 million. I add that on. We're at 140. Then depreciation. Well, the Todd Shapiro Show probably doesn't have a lot of hard assets, right? It's not like you own buildings and whatever. You might, but anyways, if you did, we'd add back the depreciation, and the same thing with amortization. And so that's how you get back to a number where we can compare that number to another business that has these different components.
Do you not? You don't take those numbers away from the earnings?
No, you add them back. Basically, you add them back because, say that you were in the U.S. where you have a lower tax bracket. So you'd add the tax, like the tax rate would be much different. Instead of like 30%, it might be 15%. And so what you're really trying to find out is looking at different companies and seeing, like, if their core businesses take away what tax regime they're in or their debt situations, like, what is the actual, like, earnings power of that business? That's what you're really trying to get at.
Awesome. Love it. Great education. Real good, real concise. Okay, Bilal.
Stat of the week.
Okay, so stockhouse.com is one of the most kind of well-known small cap communities in North America. This is where a lot of investors go to find out small cap information. The stat of the week is that they said that in the last 18 months, their entire demographic of people that go on their site, so it used to be like older people, but now it's entirely shift. It's millennials. So their main driver of people on the site are 25 to 34-year-olds. I found this fascinating because millennials are, the largest generation in North America, and they've discovered equity investing. They've discovered stocks. So I find that fascinating.
There was an acquisition today announced. I forget, it's called Solium Capital. Did you hear about this?
Yeah, that's another one that I used to own. When I was a portfolio manager, I owned this stock, and I saw it getting taken out by Morgan Stanley, right?
Yes, and the reason why Morgan Stanley bought it and purchased it was because of their millennial users.
Wow,
which totally keeps them. And so they're trying that. It's a way to get to a millennial crowd who's using Solium Capital. I guess they have that demographic. And you're right. Everyone's, and I mean this. Everyone is taking much more notice on the markets. I guess everyone's looking to get rich.
Yeah, and everybody's trying to figure out how to talk to these millennials. And I'm happy that, Todd, we have this show called Stock Jocks Millennial Mondays. I think that it resonates with them.
Yeah, and jocks, for the record, can be men and women. Michael Gelbart, who's falling asleep in studio. We're trying to help you here.
I'm fine.
Make some money.
Bilal, let's go.
Finance to hate.
Ooh.
Okay, so what I hate about finance is CEO pitches that take forever. They're long and boring. I love simple and snappy. And one of my favorite quotes is by Einstein. And he says, if you can't explain it to a 6-year-old, you don't understand it yourself. So I want to say to every CEO out there, when you're talking to some of the biggest wealth managers on the planet, or even when you're just talking to your family, give it a 3-minute pitch. If you can't compel people in 3 minutes, you don't know what you're talking about, and you've lost your audience.
Yeah, very good point. And I find that with a lot of companies in their news releases and stuff that they'll use a lot of big words and a lot of confusing stuff. And, we saw this, to be honest, not to take away from any of it, but when we were at your big conference back in Bahamas, Grit Capitals, with a lot of at the time, those like ICO pitches and stuff. And people sometimes were going way too elaborate into detail that it just didn't really make a lot of sense. And it does for those who understand the lingo. But at times, you're right. You got to not necessarily dub it down. I use another quote from Albert Einstein describing me. He once said that he had no special talents, but he was only passionately curious. And while he lied, and was obviously, listen, Albert Einstein, very, very humble guy. That's what I think why I'm successful for that $100 million company, Michael Gelbart.
I think so too. It isn't dumbing it down. It just means you have an idea that people understand, that they can get their heads around.
Does it work that way in comedy, by the way?
It works that way in everything. Yeah. In communication, it's important for people to understand what you're talking about in as quickly a way as possible. Like, look at the movie Taken.
Tangible examples of something that they can relate to in their everyday life. Like, Peter Lynch was one of the most famous investors. He ran the most successful fund at Fidelity. And he was always like, he had a book called One Up on Wall Street. And it was all about, if you want to invest, look around to the things you understand, right? And I think it's the same thing when you're trying to communicate. It's like, who's your audience? What do they know? Why don't you paint the pitch in their eyes, instead of in the eyes that you understand, but really take their perspective.
What about Taken, Michael?
The movie Taken was a huge hit.
Sure.
And people understood from the poster and from the trailer, a guy's daughter gets taken and he wants to get her back.
That's it. That's all you need to know.
The Shawshank Redemption took years to become a beloved movie. It did not perform well at the box office when it was released because no one could understand what it was based on its title or its poster. And that's true of pretty much anything.
That's good. Those are good analogies. Okay, let's find out the things you love about finance.
Finance to love.
Okay, I might get in trouble for this one, but the one thing I love about finance is it breeds and attracts very intelligent, a very special character. So one of my friends is a hedge fund manager. His name's Moaz Kassam, and his fund has been rated by Barron's as one of the top hedge funds in North America. And on his Instagram, his quote is, I trade stocks, but I shoot film to support my food addiction. So literally, this guy loves stocks, but he's also really into food. So check him out. Munching Moaz is his handle. And he literally travels all around the world when he's looking for stock investment ideas, but he also loves to eat. And he's really good at showing off gourmet food.
That's nice.
No, but it is interesting. I met a lot of people over the last year or two in finance, and they will get a stereotype, right? Capitalistic, greedy, whatever it may be. But it's not to say that just because there are some, great individuals who have made a lot of money or people that you fit that stereotype, but, aggressive and kind of, fast talking, and it doesn't necessarily mean that they don't have some really great interests, eclectic interests as well. And people should be, I mean this sincerely, actually, and I think it's a good thing you bring it up. And I love it about finance too. I love the characters that you meet in finance, but don't just pick their brains for the finance side if you have an opportunity to find them. Find out what their hobby is. Find out, they might be a boat collector and they'll take you a ride on a classic boat from 1920s. Sure, they can afford a boat from the 1920s that you can never even dream of, but they'll be the first to want to share that experience with you too. And there's a lot of great experiences you can share from these people if you give them an opportunity and not be intimidated by them. Is that fair?
Yeah, totally. And I can't wait, down the road to write a book about this, about all these different characters and really bring them to life, because I think people would really appreciate all these really niche interests that they have. And if you get really passionate about one thing, like a hobby, you're usually very passionate about another thing. So if you're good at stocks, you'll probably be good at something else. It just speaks to kind of the core values of someone.
No, and for me, listen, I made a little bit of money on the stock market. What did I do? I went and bought a shoe collection because I could never have normally afforded that, and I definitely couldn't afford it when I was and I'm not putting myself in the categories of the people Genevieve Roch-Decter, but you can use that money for doing things you have passion for, and that my shoe collection creates a lot of talk amongst my friends and even people on Instagram and everything. It's kind of cool to be able to share and have knowledge about that, not just search through it online somewhere, but actually make it happen. So people, through Genevieve Roch-Decter and through me, listen, listen, we're never giving you ever stock advice. We're always telling you to do your due diligence. We want to obviously let you know that there are sometimes we talk about things that will have positions in, full disclosure and transparency. But go and check out the markets, learn these lingos. We're trying to bring it to you in the simplest of forms like Albert Einstein would encourage. And we thank you, Genevieve Roch-Decter from Grit Capital, for all your time.
Rock on, Stock Jocks.
Cheers.
She's got the greatest name. Genevieve Roch-Decter is a cool name.
Cool name, eh?
Yes.
She's a badass, man. She's cool. I like that stuff. Did you learn anything? Are you going to take away?
I learned a lot.
This is the Todd Shapiro Show on Canada Talks, SiriusXM 167.